Last week's sort of roller coaster ride, this intraday, these reversals, 2%, 3%, 5% in a single day. What do you think that's telling us?
You know, I was reared to believe that volatility wasn't great, right? Like I thought maybe we'll get 5-6% per year returns from the S&P 500 if I hold it for the next 10 years and don't do anything. And now I'm getting half a year's returns in 30 minutes. I'm losing half a year, you know, so generally that volatility means something uncertain is going on and isn't necessarily a good leading indicator of the all clear signal. So sure, you can get positioning and sentiment rallies like we're having here, but I don't think it means, you know, rainbows and lollipops and unicorns are headed our way.
You think either Thursday or today, one of these rally days is pivotal?
You know, I've been hearing a lot of convoluted calls from people on CNBC and from clients like, hey, I think there's a long-term capital management coming, but I still want to buy equities before that. Or, you know,
You've heard that, a long-term capital management?
We had it on your channel last week.
I guess with the stuff in the UK, people were concerned.
These are all people incredibly successful, so I'm just saying it just points out that there's tension, right? Like, we know something's going on in the bond market with financial conditions, but equity, you know, Nasdaq's down 33%, so maybe I'll get my shot if I have a long-term investment mentality. So my point is, I think there's a lot of tension and uncertainty. I think there's things that are clear. Earnings are coming way down. Everyone knows that. Inventory is the KPI for this quarter, and it's a bigger problem than people think. And I've been writing a lot and talking to clients about could this not be a V-shaped thing like we had in but could it be just a slow decline from a high nominal GDP where maybe 2024 earnings are actually not really even above 2023, and so we're all underwriting like, yeah, things are bad in the Fed, but it'll get better, and maybe it's just going to be like a slow bleed from a high nominal GDP.
That sounds horrible.
Yeah, I think it could be.
Nobody wants that.
I don't think it'll be great. And so I'm kind of sort of entertaining, like, what I'm working on right now, what clients are asking me is, what can I own that I believe 2023 numbers will really be above where they were in 19? Adjust for rates, adjust for the economy, adjust for oil, and like, is Amazon going to earn a lot more next year? Yeah. AWS is going to be good. The revenue is probably 2x in 2023 what it was in 19. Like, maybe I can find some things just taking the pig all the way through the snake, or however you want to phrase what happened here. And so I think you can find long ideas, but in general, I don't think it's like an all-clear signal in any way to say equities look great.
Well, we had Mike Wilson on earlier, very influential these days in terms of his calls. And
he replaced me at Morgan Stanley. I used to be the strategist.
Yes, he did. Yes, he did. Not doing as nearly as good a job as you did.
I love Mike, great guy. But we have a different view of the world. Like, you'll never hear me use the phrase moving average on your channel.
Why not?
Because we do research and it's nerdy. Right, and Mike's got a huge, network at the biggest firm, financial advisor network. So we're quant geeks, right? So our stuff's going to be much more. You saw our note this week. We're writing about available alpha and why it's been a tough environment for stock selection, because a lot of people that I talk to just don't do energy and utilities and insurance because they don't have the expertise in those areas. And what's left over has been tough for them to pick long short spread. So it's a kind of servicing.
Understood. Although he comes to a similar. I mean, he's talking about a 13 multiple at the trough.
I taught him everything he knows, just not very much of what I know. Okay, and he'll definitely be texting me in the next 5 minutes on that. But no, it's I hear you. I think he's probably got. I don't think CPI is going to go down as fast as their house view does. I think it's going to be stubborn because of the owner equivalent portion of rent. My guess is the Fed stays super hawkish. So I don't. Yeah, maybe inflation's peaked. Maybe that's the case. But one of the things that you have to think about is we all want the price to earnings ratio for the market to go up. We need that for equities to go up. But is that going to happen at the same time the earnings start going down? And now I'm multiplying a PE that's up times an E that's down, and it's not like off to the races 4,200 or 4,300. And if you really parse through, I was listening upstairs. If you really parse through, if you think the market's going to 13 times earnings and you think earnings are going to be 220 or so, the market's way lower.
Yes.
The price target's 2,700 or something like that. So I don't know how to think about the short-term call on the technicals, which is not really my expertise, and I would defer to guys like Mike and others. But, kind of thinking through where we're going to be Q1, Q2 of 2023, market 6 months anticipatory, I think we're going to be lower.